25, 26 point kind of a open pop.
There is that large cap which doesn't move day after day, and then you've got the mid and the small caps which continues to soar.
The bank Nifty is up around 370 odd points.
So we're above 19,440. Hopefully the speed should pick up a little bit now, and it's not going to be a drag and slow move. Okay, well, that's basically the end of trade, 43 points higher.
Hello and welcome to Markets Today. I'm Nigel D'Souza. Here are the key headlines for the day. The Sensex and the Nifty end with minor gains. The broader markets continue to outperform, with the Midcap index hitting another record high. Metals perk up after China allows 12 provinces to issue 1.5 trillion yuan worth of special financing bonds, and the nation's building season kicks off. Indian metal stocks also gain. Torrent Pharma is likely to have entered the race to acquire controlling stake in Cipla. Sources say Torrent may need support from investors to fund the deal and could look at forming a consortium with private equity players. CNBC-TV18 first reported of a possible promoter stake sale in Cipla on the 27th of July. Power companies in focus after the government directs imported coal-based power units to run at full capacity till October to meet the electricity demand. Separately, Brightcom hits lower circuit after Sebi bars the promoter from holding directional positions. More than 227 crore shares will flood Dalal Street over the next 4 months. 37 companies will see pre-listing shareholding lock-ins lift starting today till the end of the year. Well, straight to the day's trading action there. The Sensex and the Nifty, well, they closed with minor gains to end 0.25% higher in the green. However, the broader markets outperformed yet again. The Midcap index scaled new peaks after it ended close to around 0.5% in the green. Banks, well, they were the superstars of the day. Prashant Nair is with us to run us through the market wrap. Prashant, over to you.
Well, it was a decent day, better than yesterday because yesterday was absolutely flat, but not very much to write home about. The market actually at one point, but around 3 o'clock, looked pretty good. It was up about 65 points, but by close it did come off a little bit. But positive close nevertheless. Nifty Bank, that's a real star. For days on end, it's been sluggish. It's been sideways. Today, the index actually ended at 1 point up about 1% or so, came off a little bit. Broader markets, Midcap index came off in the last 30 minutes of trade. Small caps did better. Midcaps, of course, made a new high. The index made a new high yesterday. Small cap index is about 100 points out from its respective high. Gains coming through in banks, as I said, right? Axis Bank, ICICI Bank leading from the front. There was a Hindalco on the Nifty pack, which did well. Losses, lots of Adani Group stocks which sold off. I mean, they were selling off in the morning, picked up on the downside in the last 15 minutes. Adani Enterprises, Ports, both lower part of Nifty. Sun Pharma was the other one which was down. Gains coming through in Paytm, which spiked in the last 30 minutes of trade. GMDC was a strong gainer. Dredging Corporation, MMTC, RCF Shipping Corporation, CESC, Gabriel India, Paras Defence, Atul Auto, Jain Irrigation, Godrej Industries, Nelco, and so many others, right? It's a broader single stock specific market, and that showed through. Cuts coming through in names like Sona Comstar, Panacea Biotech was lower, Radico, Borosil Renewables, the new listing which is SBFC, and Rainbow Hospitals, which spiked yesterday, which gave back some of those gains. So that's the market for you. Broader markets are looking good. Nifty and Bank Nifty trying to find their way. I think if the Bank Nifty does what it did today over the next couple of days, I mean, the market will be out of this rut, out of this consolidation phase quicker than what we would sort of have hoped for. Look out for US markets as well. The NVIDIA numbers, what it does to the tech stocks there. And of course, yields have been the big focal point globally. Back to you.
Well, thanks a lot for that, Prashant. Well, in market opinion, Venugopal Ghare, Managing Director at Bernstein, and Gautam Dugat of Motilal Oswal Institutional Equities are positive on the Indian markets. While Ghare believes the downside risks still remain, Dugat says that the sentiment is upbeat for the next couple of years. Let's hear out what they have to say.
I think I'm still positive on the markets. When I say positive on the markets, my view hasn't really changed with respect to downside risks. So positive primarily from here means that there are limited downside risks. What is going to happen from here, in my view, is that even if I take a broadly positive construct in the market, for me, the next touch point is broadly elections.
Actually, there is a lot of interest given the market is doing very well, especially the mid-cap and small-cap. And if you see through our CEO track, you would find one distinct difference this time compared to earlier years. The CEO track has a lot of mid-cap companies representing different sectors this time. It was deliberately chosen like that because we've seen the mid-cap and small-cap index over the last 3-4 months doing exceedingly well, and a lot of money flowing through into those schemes. This is a very unusual time where both macro and micro for India has been doing really well. So quite naturally, a lot of interesting takeaways pointing towards the upbeat sentiments around India over the next couple of years.
Well, let's move on to the second headline now. Let's take a look at the commodity space. Metals, they perked up in trade after China allowed 12 provinces to issue 1.5 trillion yuan worth of special financing bonds. And the nation's building season kicked off as well. Some Indian metal stocks as well did pretty well in today's session. Manisha Gupta joins us to fill us in with more details. Manisha.
Oh, well, yes, it's been a good day for metals when we have seen the dollar index kind of consolidate, and there is positive cues coming in from the fact that the building season in China is beginning, and then China has permitted 12 provinces to issue nearly 1.5 trillion Chinese yuan worth of special financing bonds. I mean, this is what really supported the market, and we saw gains come into there. So much so that you have the steel rebar prices now trading at around 3-week highs. Iron ore is trading at a 3-week highs as well. If you look at the last 2 or 3 trading sessions, we've seen gains of anywhere between 1 to 3% for many of these metals. Also add to the fact that the World Steel Association says that for the month of July 2023, they have seen a gain of 6.6% in sensor production, and the best of the gains clearly come in from China and India. Better in India, where we are looking at 14.3% of a jump up in sensor production here. If you look at copper, here as well, there is support coming into the markets. We are way off those 3-month lows that we were trading at, and that is because the Chinese refined copper demand is shown jumping up by 9% in the first half of this year. Of course, you'll need to see way higher measures from China and better demand to come in, because the International Copper Study Group also says that while last year in the first half of 2022, it was a deficit of 196,000 tons, this year the first half has seen a surplus of 213,000 tons. So markets really are awaiting for better numbers there. But the best of the moves really have been seen in the battery maker metal, which is lead, which is trading at a 17-month highs right now. That is because the future deliveries for the month of September have suddenly built up a lot, and there isn't so much of lead inventories on the exchange, and that seems to be supporting the prices. If you look at the lead cash prices, they are at a premium of almost $20 a ton to the 3-month prices. So the demand in the very near term seems to be really surging. Markets do believe that you could have perhaps seen a bottom in case of many of these metal prices. It's going to be consolidation, even buying for some of these going forward.
All right, thanks a lot for that, Manisha. Well, GMDC as well was buzzing in trade. And just a few days ago, they went ahead and they revised their dividend payout. Earlier, they were talking about paying out close to 9 rupees 10 paise. They revised that to around 11 rupees 45 paise. The street was clearly excited. They increased their dividend payout by close to around 20%. I'll tell you what, the stock is risen by more than 20% from the date of that announcement. Let's run you through a few factors. One is the dividend yield. If you work it out, it's around 5.1, 5.2%. That's around 11 rupees 45 paise as a percentage of the share price. And as a percentage of the EPS, last year's EPS, it works out to around 30%. But the results, though, were quite disappointing. It came out earlier in August itself. And Q1 numbers were weak. Margins did contract. We saw degrowth on the top line, degrowth on the bottom line as well. Maybe it had to do with the seasonal factor that played out. The power business as well, which is a smaller component, delivered an operating loss in comparison to the operating profit. Moving to the triggers moving ahead, the street will be tracking recovery in the second half of the year. Q2 normally is a problem because of the monsoon. So, Q2 is almost a washout on a year-to-year basis. But the street will track recovery in performance and also unlocking of the opportunity they have been talking about in the rare earth element space. Now, the street would like to know some numbers from there. They have been investing some money. They have been putting on consultants as well. So what is the outcome is something that the street will look forward to. And then finally, in terms of shareholding, the promoter entity is the government that holds 74% odd. While FIs and DIs put it together, they have 4.5% stake in the company, though we don't know the names of those FIs and DIs as per the BSE filing. That's about metals and GMDC. Moving to the third headline. Now let's turn our attention to the pharma space. Torrent Pharma is likely to have entered the race to acquire the controlling stake in Cipla. Sources have told CNBC-TV18 that Torrent Pharma may need the support from investors to fund this deal. Torrent Pharma, well, it was down close to 2%. Cipla was mildly higher in trade. Ekta joins us to fill us in with quick details. Well, Ekta, what are your sources telling you?
The latest news as per sources to CNBC-TV18 is that Torrent Pharma has joined the race for Cipla's promoter stake. However, due to the size of the likely deal, Torrent might need investor support for the stake buy and could look at options such as forming a consortium with PEs. Separately, PEs continue to be in the fray for Cipla's stake, such as Blackstone and Baring PE. Remember, CNBC-TV18 was the first to report on Cipla looking at a stake sale to PEs. CNBC-TV18 is currently awaiting a comment from Torrent Pharma. So the question is, why might Torrent be interested in Cipla? The main lure, analysts say, is the access to Cipla's India business, which is around 2 times the size of Torrent's India sales. Cipla, which gets around 43% of sales from India, is ranked 3rd, while Torrent, which gets majority of sales from India, is ranked 6th. The overlap also between the two companies is expected to be limited to around 1% of their top 50 brands, as per analysts. Torrent might also be interested in Cipla's US arm, which is 5 times the size of Torrent. To put it into perspective, Torrent's FY23 sales from the US was $145 million, which is less than Cipla's quarterly run rate of around $200 million. While it will add around $700 million in case the deal does go through, for Torrent, it will come with regulatory issues such as Cipla's Goa and Indore plant, adding on to Torrent's 2 critical plants which are under the US FDA scanner. The worries of a likely deal such as this would be on the margins. Torrent's margins in Q1 were at around 30.5% and Cipla's at 23.6%, with Cipla's South African region margins expected to be lower. Additionally, Torrent is well versed on India-focused acquisitions. They have in the past decade made significant acquisitions such as Elder's domestic business in 2013, Unichem's India business in 2017 and Curatio Healthcare's business last year. But the deal size has been much smaller, ranging from around 2,000 to 3,600 odd crores. The other worry about a likely deal is how will Torrent fund this likely deal. Cipla's market cap is 1.5 times Torrent's. Cipla's promoter stake is worth over 30,000 crores, and with an open offer, the deal would go upwards of over 55,000 crores. Torrent already has a debt to equity of 1 times. How much would they need to take on to fund a deal of this size? And if it is a consortium, what would the structure be like? Lastly, initial thoughts from analysts such as Antique is that Torrent, if it is looking at Cipla, might be biting off more than they can chew, and the structure and other factors such as continuity in management such as Umang Vora, who is considered critical to operations and been with the business since 2015, will be watched.
Thanks a lot for that, Ekta. Well, time to slip into a short break. We'll be back in a jiffy with other market updates. Welcome back. You're tuned in to Markets Today. Well, the fourth headline now. Power stocks, well, they're in focus as the government extends Section 11 of the Electricity Act till the 31st of October. What does this actually mean? Well, Vivek is with us to explain all of that to us. Vivek, over to you.
Well, absolutely. As early as in February 2023, the government had anticipated that the peak power demand would actually necessitate the use of plants that were not operating at full capacity, and also plants that were importing coal from outside of India, especially plants that are based out of Mundra and Gujarat. So Tata Power, one key beneficiary of that. However, the government was not allowing a full pass-through as far as these costs were concerned. So the emergency clause was activated, where for a specific period of time, the government allowed a complete pass-through as far as these costs were concerned. So now, this is the second time an extension has come, and this was expected given the fact that especially in the past week, we are actually seeing power demand hit historical highs. So in the last week, power demand has been consistently above the 230 gigawatt. So what's actually happened? The government has extended Section 11 till 31st of October 2023 from earlier 30th September deadline that they had set about. This particular move was done to ensure availability of electricity, and also all imported coal-based plants that we mentioned will now be able to operate as well as generate power at full capacity.
Thanks a lot for that, Vivek. Well, Brightcom as well was down in trade. Sebi has barred the promoters and the CFO of the group from holding directorial positions. It has also restricted sale of shares by them and 22 others, including prominent investor Shankar Sharma. Sebi cites irregularities in the company's preferential share allotment. Rima joins us to fill us in with more on that. Rima?
Thanks so much for that. So Sebi has passed its second interim order in the Brightcom group. And it's a very long, extensive report. But some of the key findings, some of the prima facie observations are, one, that the company itself had financed the preferential issue. Remember, they raised about 867 crore. There was round-tripping, circuitous movement of fund. Secondly, they've also submitted forged and fabricated bank account statements to show as evidence of receipts of share application money from allottees. Third, the proceeds of the preferential issue were not utilized as per what they had declared they would. And fourth, there is a possibility that some of the money may have been siphoned off, or at least as of now, it's been unaccounted for. Sebi has barred the Brightcom CMD, Suresh Kumar Reddy, and the CFO, Narayan Raju, from holding board positions in listed companies. They go on to say that the chairman, Suresh Kumar Reddy, is barred from the securities market till further orders. He has to square off all his open positions in the next 3 months. Also, as you pointed out, certain influential big investors, including Shankar Sharma, has been prohibited from selling shares in Brightcom Group till further notice. In response to that, Shankar Sharma has tweeted, and this is his clarification, that they have submitted all the required reconciled remittance data to Sebi today. The delay was on account of the bank reconciliation data pending from the company. So he's hopeful of an early closure of the matter. Shankar Sharma had participated in the preferential issue to the tune of about 56 crore rupees, and he has submitted the required documents today. The Brightcom Group has also intimated the exchanges about a clarification, how they've set up an internal team to review the details, the implications. They're evaluating all potential courses of action to address the situation. But whatever they do, it will be in the best interest of the company and the shareholders. Back to you.
All right, thanks for that, Rima. Well, in some stock-specific news, Qatar Investment Authority will invest more than 8,200 crore rupees in Reliance Retail for less than 1% stake. The investment will value Reliance Retail at 8.27 lakh crore rupees. Manglam joins us for a quick analysis on that. Manglam?
That's right. An investment coming in Reliance's retail business from Qatar Investment Authority of almost $1 billion. That's 8,278 odd crores. This values Reliance's retail business at 8.278 lakh crores, which is roughly about $100 billion as well. This valuation itself is largely in line with the valuation that analysts ascribe to Reliance's retail business. For instance, we have JPM and something like a JM Financial evaluating Reliance's business anywhere between $100 to $105 billion itself. Also in line with independent evaluators' numbers of EY as well as BDO. The important part, Reliance is trailing 12-month revenue of close to 2.7 lakh crores and EBITDA of nearly 20,000 crores will grow and benefit largely from gradual recovery in consumer sentiment, and at the same time the company's increased store footprint and operating leverage will expand it as well. The big triggers for them will be expansion of their own FMCG brand Independence, the tie-ups that they've done, the beauty platform launch of Tira. They're entering beauty and personal care categories as well. And this quarter we saw 11 times growth in their beverage portfolio, so that would be another growth driver as well as the integration of Metro AG's India business. The key to track will be the performance of their acquired brands and the new launches, and announcements in regards with any sort of acquisitions and expansions in that vertical as well. A strong retail footprint is what Reliance has grown, and now it's become the valuation driver for the company at $100 billion.
Well, the fifth headline today, an important alert for shareholders who invested in IPOs. 37 companies will have the pre-listing shareholder lock-ins lifted starting today. This means that around 227 crore shares will be eligible for trading in the 4-month period. Hormuz joins us to fill us in with a list of all these stocks that will be opened up for trading. Hormuz?
Yeah, it's almost nostalgia, right? Because around the same time last year, sometime during October and November, there was a slew of companies who had their lock-in periods ending. And this time is no different. Now, according to a Nuvama note, a total of 37 stocks and over 227 crore shares will become eligible for trading once their lock-in period ends. Now, this lock-in period ranges from 1 month to as long as 3 years. But I'd like to begin on a different note, and I'll start with India's largest IPO, which is LIC. And that's because out of the 227 crore shares, 126.5 crore shares belong to LIC. Now, LIC will complete 18 months of listing in November, and that is when their 18-month lock-in period ends, which is on the 13th of November. post which those 126.5 crore shares will become eligible for trading. Now let's move to the recent listings, and Netweb Technologies is the one whose 1 month lock-in period is opening today. Now that stock will have 20 lakh shares which will become eligible for trading, and other stocks in this list include Yatharth Hospitals, SBFC Finance and Concord Biotech, which will have their lock-in period anywhere between the 1st to the 3rd week of September. And now we move to the 3-month list, and of course these names will also have a 3-month lock-in period. Of course, I'll not rename them, but a standout stock in the 3-month list is Utkarsh Small Finance Bank, which will have its lock-in period ending on the 16th of October, post which 4.5 crore shares of the company will become eligible for trading. Now in the 6-month list, more than the number of shares, what's important to note is the percentage of outstanding shares that takes center stage. And another standout in this list is Mankind Pharma, because the stock has almost doubled from its IPO price, and once this lock-in ends on the 6th of November, almost 70% of its outstanding shares will become eligible for trading. Now onto the 1-year list, where you have stocks like Syrma SGS, whose lock-in period ends this Friday, and it will free up at least a quarter of its outstanding shares. And completing the list are stocks like Fusion Micro, Kines Tech and Dharmaj Corp. And it is this 18 to 24 month lock-in period where I mentioned LIC. And aside of India's largest IPO, there are also stocks like Campus Activewear and Star Health Insurance, which are trading just around or even below their IPO price, which is Star Health Insurance. Even those will have anywhere between 20% of their outstanding shares freed up. And lastly, it's the 3-year list, and this comprises of the most successful IPOs in recent times like Happiest Minds, Angel One, Mazgaon Dock. And all of these names will have 20% of their outstanding shares which will become eligible for trading after their lock-in period ends. So it will be interesting to see what kind of impact it will have on the stock price, outperformers and underperformers alike.
Thanks a lot for that, Hormoz. Well, on that note, though, we'll have to wrap up on this edition of Markets Today. You stay tuned as news and updates continue right here on CNBC-TV18.